Will Bitcoin rise again after experiencing a major shakeout? If you're interested in knowing more about this, please keep watching. Let's take a look at the positions. I currently hold on Bybit, which remained the same as yesterday. I still hold a long position in Bitcoin worth $750,000. As for Ethereum, I'm in a rather unfavorable position. I have entered a long position, and I can explain why in detail later. Now, let's examine why I haven't closed this long position yet. We provided a thorough explanation yesterday. And currently, if we only consider the profit, there is still a profit of over $53,600. If you think this profit is good, I welcome you to click the Bybit link below any of my videos. After performing KYC verification and depositing $100, you will immediately receive a Bitcoin contract position worth $1,000. This is a real position, and you can withdraw your profits. Now, let's take a look at the current market situation. Starting with the daily chart, let's discuss the candlestick from yesterday's close. This daily level candlestick has some significance and content. It closed as a doji candlestick with a significant volume. It's a doji, so red or green doesn't matter. It's a doji candlestick, so the opening and closing prices are very close. In this case, whether it's closed in red or green is not very important. However, the long upper and lower shadows can provide us with some insights. You can see that this candlestick had a very significant volume yesterday. Now, let's analyze whether this volume indicates a stronger bullish trend. In fact, we can't say that. Let's dive in. When interpreting volume, we can skip this type of volume. When it forms a doji candlestick, a doji candlestick does not provide substantial information for both bulls and bears. Let's zoom into a smaller time frame. After zooming in, we can observe that yesterday's candlestick had a significant downward movement. Yesterday, we provided a timely video discussing the recent market downturn, which was related to the submission of several Bitcoin spot ETF applications to the US SEC. These applications were found to have certain incomplete information. However, I personally do not rely solely on this news to form my interpretation, because it can be interpreted in various ways. Instead, I focus on analyzing the market conditions, which we will discuss shortly. Let's first talk about the news aspect. Honestly, it can be interpreted in different ways. Some people interpret it as bearish, because the SEC raised some concerns. However, others view it as a bullish signal. They believe that this is a piece of good news. The SEC is going to conduct a serious review. They raised questions, so the chances of approval for a Bitcoin spot ETF are higher. Since the SEC is conducting a thorough review and has identified the issues, the application can be resubmitted for further consideration. Some people interpret yesterday's news as a bullish sign. Therefore, news can be interpreted differently, and it varies. Like the phases of the moon, we have the news of the spot Bitcoin ETF the second, and then something bad happened the next second. Analyzing charts is the most direct approach. Now, let's take a look. In yesterday's bearish candlestick, the volume was indeed significant and solid. However, based on the current market conditions, I don't believe the bears have a clear advantage. First, we discussed this range yesterday, and no candlestick has closed outside of it yet. All the tests at upper and lower boundaries are just spikes or fake outs. There hasn't been a genuine candlestick closing outside of this range. In my opinion, if we see a breakout signal from this range, it would be the most important entry signal in the near term. Personally, I pay close attention to whether the price closes above this range, forming a genuine candlestick. If that happens, it could potentially be an excellent entry opportunity, or even the starting point of the next significant upward movement. Let's take a look at the recent downtrend. We'll focus on this specific downtrend, which has many things to be discussed. Let's check out the hourly time frame, which provides a more direct analysis. It's important not to interpret this downtrend as a strong bearish trend. Don't interpret it that way. If the bearish trend were dominant, the subsequent rebound would not have been as significant, comparing the entire downtrend to the preceding uptrend. we can observe that the recent uptrend reached approximately 0.786 of the entire downtrend. It means that the uptrend is about 78.6% of this drop. This indicates a high proportion, suggesting that the downtrend may not be valid. The price levels during the recent decline were similar to those of previous days, and the decline was subsequently recovered. If the bears were in control, they wouldn't have trapped themselves. Typically, if the big players were bears, they would sell off their positions and drive the price down. However, since the price has almost returned to its pre-decline levels, it would make the bears uncomfortable. Another aspect worth examining is the distribution of the chips during this downtrend. What happened next doesn't matter. Well, let's just focus on this drop. This downtrend has the most significant trading volume. Why do I analyze it this way? The trading volume during this downtrend appears to be bearish. It has a long lower shadow. It's a long lower shadow in comparison to the entire candlestick. Let's check out the horizontal composition of the trading volume. We need to determine where the majority of the trading volume is. Currently, the most densely accumulated volume is around the range of 30,000 to 30,250, with a difference of approximately $250. This range represents the majority of the trading volume. Comparing this to the current price level, we can see that the current price is above this accumulation zone. We can see that for those who traded in this range, whether in spot or futures markets, the current price is higher than that of their trading zone. We can say that those would have experienced losses. Those who panicked and sold during yesterday's decline incurred losses. Of course, it is highly unlikely for crypto whales to allow themselves to suffer losses or get trapped. Hence, this recent downtrend could potentially be a means for big players to collect chips from retail traders. Alright. This is my interpretation, which aligns with my viewpoint. At the time of the urgent video update we released yesterday. Alright. Thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.